In this video, I want to speak about gold. Now, as usual, to keep the video as educational as possible, first I want to cover the technical aspect of this market. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing a very strong level of previous monthly resistance, which was again acting as resistance here and here, which the market at the moment is once again about to test. So what we could expect here is a bit more bullish price action for a deeper test of this resistance, as happened already in these cases. So a bit more bullish price action could be expected. Dropping down on the weekly, what do we see? Now, from a weekly perspective, price action is quite clean. We had the impulse, correction in general. After an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market stopped exactly at the 0.786 of the Fibonacci taken on this weekly impulse, which in this case was lining up perfectly with previous resistance turned support, creating confluence of support at this area, which we did in fact expect the market to test before then starting to get rejected to the upside. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, what we can notice is that we had the impulse correction, the market then created a continuation higher, and at the moment it seems, at least, like there is the possibility to see some bearish price action. The reason being is that from a weekly perspective, it is also important to point out that the market has now tested the previous high, and from the previous high there is the possibility to see some short-term rejection to the downside before then continuing higher. Now, if we go and see, before we continue with our analysis, what is going on when it comes to the commitment of pretty bullish. So we don't know if the market will create a move to the downside, but if we do get this move to the downside, at that point, things would become quite interesting for gold, because we would have the creation of this M pattern, and in general, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance. And if we actually get this move to the downside, we would also have a test of previous daily resistance turned support in a bullish market. So if we do get this move to the downside, how we could be approaching a potential reversal higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and day, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of the M pattern at the neckline. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.